All right, cool. We are live and good to go. I just had a little bit of trouble there with my with my connection, but it looks like everything is okay. So just to start off, next time for our streams, I'm just going to come in about 5 minutes earlier. This way, there's a little bit of latency with the video and going live on YouTube. It's something that I still need to adjust to, but nonetheless, that's perfectly fine. These sessions are recorded anyway, so anyone that has anything that you would like to see, it's going to be very easy for you to detail out information. Now, going forward, I just want to preface this by saying I'm going to start doing YouTube a little bit more consistently. And the reason why we want to do this is that we want to be as inclusive as humanly possible with the people that just have no idea with what they're doing with trading. So what we mean by that is whether maybe you're a scalper, maybe you're a little bit intraday trader, maybe you're an option seller, option buyer, maybe you're an investor, what have you, it doesn't matter. For these sessions, I'm going to let you guys dictate what it is and what kind of content you would like to gear towards after I get through the preliminary information. So going forward, I'm just going to show you a document real quick. This is going to be my Notion document for all the live sessions that we have going forward. So first and foremost, this is going to be my agenda for today. So January 10th, right? That's what today is. Tomorrow we have CPI and we have PPI. If you don't know what those two things are, you probably should, because we've been in an interest rate, very sensitive environment for quite a while here, for maybe about 14 months. So CPI ultimately is going to give you the month over month and then year over year sort of inflation data. You have core CPI and then you have general CPI. So we're going to look at some of the consensus, and we're also going to look at some data that's coming in via option flow. I'm going to explain to you guys this in very, very clear detail as to what it means. And I know that some of you might be trading with me for about 2 years or maybe even more, right, since I started at HighStrike. But some of you, I am very conscious that you have absolutely no idea what some of the terminologies are. It's perfectly fine. So just a quick run through. I'm going to give you a quick introduction. We're going to go through a rundown on some of the not some, but all of them. We're going to go on the indexes, so SPY, Qs, IWM, and DIA. Those are the four major indexes. We will talk about CPI and PPI expectations and also scenarios. So the thing about me, when you're trading, we're not just looking to trade off of a specific level. It hits that level, and then we take charge. That's not necessarily how I like to go about trading. I like to hit a specific level, and then as we hit a certain condition, which we'll talk about here, then from there I like to persist on a given game plan. So before I'd like to take any trades, I would prefer to have a game plan before doing anything, right? And it doesn't matter if we're doing that via long term or shorter term, we always need to have a game plan. So we'll talk about that. And then we'll talk about the trade review for Monday scalps. I took 4 trades today. I'm up about $45 on my scalp positions. Is that great? No, it's not great. Am I up on some other positions that I'm in? Yes, I am up a few $1,000s on some other positions. But all in all, it's not about hitting home runs every single day. It's more about getting to first base. We'll talk a little bit about those trade reviews when we get to that section. And then we'll do 5 new trading ideas. They're going to be completely arbitrary. They're going to be the ones that I find a little bit more interesting. I'm going to explain to you in depth why it is that I like these positions, why I think they're interesting, what it is that you need to look out for, and also sort of the time frame of when you are looking to take these trades. And then at the end of the presentation, it's okay if there's not too many people on for the presentation. I'm going to leave the questions open and I'm going to hang out a little bit. If y'all want to ask me several questions, that's perfectly fine to do so, okay? So that was the quick run through. Let me just do a quick introduction for those of you that don't know who I am. My name is Sage. I've been trading it's been 12 years, going actually in February of 2024. It's going to be 12 years. My background, I have a pretty extensive finance background. So I have people in my family that have been trading for a while. I have 2 people that trade for a very big asset management company out of Italy. They're actually based in Brazil. And then I have also a banking investor that works, not in my family, but he's in my family and he works at HSBC, and he's been doing that for maybe 15, maybe 17 years now. So I have a little bit of a background and knowledge, but my thing has always been option selling and also investing. I do like to scalp more now. Now that I have a little bit more capital, now that my account is a little bit bigger, then I'm a little bit privy with some of the positions that I can take. So I'm a very big advocate of keeping your positions relatively small, because we want to try to remove as much emotion as humanly possible when we're taking our positions. I advocate a lot for this, and I'm sort of repetitive for this, But all in all, I want to maintain consistency with information that I'm always giving people, whether you're paying for our services or whether you're just watching a YouTube channel and you're just in here by happenstance. So all in all, small positions, everything that I'm going to talk to you, if you guys generate an idea, do not go out there and put $25,000 in a position just because you think it's a good idea. I wouldn't recommend doing that. I would recommend you take things in strides, do your own due diligence. Everything that we do are recommendations, and just be very mindful with your money, guys. All right, so that's my quick introduction. We'll do a quick rundown, not on UNG, even though I am in a UNG position. We're going to do a rundown here on SPY. I'm just going to clear my Notion page, and I'm going to see if there's any comments as I'm going through the stuff that I need to go through now. But all in all, let's talk about SPY. So SPY, a couple things going on here, right? So in the chat for the last, I would say, week to about week and a half, we started pulling back from the all-time highs. So let me preface a little bit on SPY and Qs so you can get some of the backstory so you understand why I have the opinion the way that I do. Going into CPI and PPI, the overall expectation is that we start running off of the interest rates, right? We're supposed to have 3 interest rate cuts. We just don't know when exactly that's going to take place. So the CPI and PPI data, specifically for CPI, the overall expectations, if you are reading into what the banks are saying the expectation is going to be, that should run you anywhere between a 3.8 to about a 4.0 reading. So that should signify to us that we are, in fact, cooling off of inflation rate data. Now, whether you're on the left, whether you're on the right, whether you're smack down in the middle, whether you agree with the number, whether you don't agree with the number, that really doesn't have much to do with what the market is going to be doing. In my personal opinion, there have been a couple people that have been stating that this is a recession and this is a bear market. I don't know where we're reaching those conclusions. I really, really don't. For me, we're at the all-time highs on SPY, and let me prove this to you, right? If you're one of those people that are only looking at the 5, 10-minute, 15-minute, 30-minute time frames, and you're not looking at your dailies and your weeklies, you are leaving way too much information on the table. What I mean by that is you need to have some context of where some of the larger, bigger investment traders are looking to take their positions, because they're the ones that ultimately move the market. I don't care if you're trading with $10 million, you do not have enough capital in order for you to sway the market upwards and downwards. So for context, guys, we are at the supply zone here on SPY. Now, when we reach supply zones, this has a lot more to do with technical analysis and way beyond the scope of this presentation here. But when we're looking at technical analysis, when we're reaching a new all-time high, or we're hitting almost a rejection level where we rejected and then started pulling back, since we had that number here, it's around the $477, $480 level, depending on how we get there. If we are getting there fairly smoothly, that's usually a pretty good sign that we're looking for some continuation upwards. I'm kind of seeing that here on SPY. So if we get a decent print on SPY, there is an upward trending quarter that I kind of drew out here. Now, you might have something a little bit different, but this is very important for some of the analysis that I'm going to talk about here for the CPI report. So as we're moving into SPY, if you know anything about markets, we have a tendency of trending upwards for a majority of the period of the time. That's the whole point of the stock market, right? You want to make money over longer periods of time. So on SPY, the pullback that we started seeing, I am personally long on SPY, but I'm indirect long on SPY on something called TNA. So some of you might be aware that I've taken this position maybe about a month and a half ago. I took this position when we were roughly around right here at about $29, and we made pretty substantial money for January, and we also have one that's going to be expiring for March expiration. So our positions are up, depending on when you got in, maybe about 50 to 60%. So why am I bringing this up? Reason why I'm bringing up TNA, it is a 3 times leverage ETF, so be careful with taking your positions here. But I think that if you want to go long the market, I think TNA actually is a little bit better of a proponent than SPY, for example. I don't like chasing tails at the top. I don't like clipping wings at the top. The reason why is I'm always looking at risk reward. So if you know what that means, it means that if you have more room to move either to the downside or to the upside, and it looks like, if you have some technical background, it looks like you have some room more so to one side than to the next, then that is a proper risk reward trade. So for example, if I were to take a long position on TNA, if I'm going to pull this back on the weekly time frame, if I'm going to include some of the demand levels that you have, the demand level on TNA, I think, was pretty appropriate, closer to the $20 level. So if you're looking at just overall risk reward and what the propensity is for the stock to be trading at sometime here in the future, TNA I thought was a decent bet for you to trade to the upside because we have all this gap to fill. Do you guys see what I'm saying here? So SPY, let's jump back into SPY, and you guys are going to understand the context of what I have to give to you. The context for us to continue moving upwards, it's totally there. It's absolutely 100% undeniably there. But for me, I think it's a little too overextended to the top. If you are using some of the laggy indicators, your MACDs, your RSI, if you're using RAF, if you're using some of the pivot points, whatever study that you're using, your indicators are probably going to be showing you sort of the same thing that they're showing me, right? So they're showing me that we're a little overextended in the market. However, now let's go back to this. If we jump in on the 2-hour time frame, if anyone has noticed, I did say so many times in the group, we're looking to bounce roughly at this $465 level. I actually had a level a little bit lower than that, about 464. So this was my level to enter. And guess what? Just a couple days ago, we started pulling back. And why did we start recovering? I'm actually going to separate this. Maybe someone has the answer here. But we actually started separating, or we started pivoting or moving off of this level down here at 465 just a couple days before CPI. Reason why is we were going into an anticipation of a fairly decent CPI report. It's been happening for the last 3 to 4 reports. And the reason why is we're under the impression or under the expectation that the CPI report is going to be fairly favorable, I would say. So this is one of the reasons why we're seeing this upward trending price action. Now let's actually get to some levels. Everything that I just said was to build up for some of the levels and some of the ideas that I have on some of these indexes. So in my personal opinion for CPI, if we do start to pull back, the first area that I have is 472. Below that, I have a target of 469. And then below that, I will have another target area of 465. So if we start seeing those pullbacks, those 3 levels that I just mentioned are going to be my target levels for me to watch in order for me to pivot off of and see if we can catch a trade to the upside. So this was one of the trades that I took today. I just didn't hold it till the end of the day. I did take 3 trades on Apple. They were all long trades. I've misfired on 2 of them. They were starting to sweep a little bit lower. And then I called the last trade finally upwards. So I got back to break even on Apple. I'll show you that when we get to the trade review stuff. So anyway, in my personal opinion, if we get a pullback for CPI, which is normally the initial knee-jerk reaction, we get a pullback depending on how strong the pullback is. I'm going to be monitoring my VIX. And with the VIX, right? If you don't know what the VIX is, it's the CBOE volatility index. You have to know what your volatility indexes are. I'm going to tell you why. If you do not understand the relationship of what implied volatility is versus the option contracts, which it is that you're purchasing, you are not trading correctly. The reason why is you need to understand where your option prices are coming from. So whenever you're looking to trade SPY, if you ever wonder, why is SPY more expensive today as opposed to another day? If you ever look at VIX, if VIX is relatively high, I can't go over this in just this quick presentation, but if the VIX is relatively high relative to where it has been sometime in the past, then you have some expensive option prices. Volatility, the volatility indexes is normally going to tell you what the volatility range is in the market, but it also directly influences the prices that you're paying for the underlying. And that's true for any stock that you're trading. But with the VIX in particular, I'm going to tell you now the VIX is low. Whenever the stock market is doing well, the VIX trades fairly low. I think the last time that I looked at the VIX for today, it closed at maybe 13, so $12.69. So what am I saying here? If we start seeing that the volatility index is spiking, it usually spikes before the binary event. It's very normal. But depending on the range of the spike, if it's spiking 5, 10, 15%, then I'm probably looking to maybe chase a short at that point in time. So we're looking to chase shorts on the shorter time frames, right? So we're looking, first of all, to pull back into this 472 area. I just mentioned this area, maybe closer to about the 469 area, which is where the volume profile is. And then below that, all the way up to 460, 464, 465, I would say. So that's what I'm looking at. Now, if we do if we get a cool number, so a cool number is going to be 4.0 and lower. If we get close to 3.8, I think we're going to blast off here. So I don't have any short positions on the indexes at all. And I've been saying this. I've been saying going into CPI, the expectation is quite high. Another element that I like to add on top of this is going to be if there are long orders coming in. Long is going to mean if there are calls or if there are puts being sold. There was a lot of long orders come in, and there's a little bit of a tell in the market. How can I tell that volatility is not rampant? At close today, we had a bullish run going up into expectation for CPI. Not everyone can trade futures. Not everyone does trade futures. So just as in, just like, let's say if you're an investor, you're looking to get into your orders before the actual CPI report. And we got a little bit of calls coming in on SPY. We got a little bit of calls, not calls, but we got a little bit of shorts coming in on BA. Everyone is very well aware BA had that debacle where that door flew off, right? And this is why the stock plummeted 8% that day, 2 days ago. But anyway, we got some long orders on Microsoft. We got some long orders on NVIDIA. We got some long orders on Meta. We got some long orders on Netflix. We got some long orders on AMD. there's a theme here. These are some hard hitters that we have in the stock market. And aside from that, this is just another little piece of information. The banks are going to be announcing earnings at the end of the week. Now, this is true for the majority of earnings that we have for banks. I'm not going to show you this here because this is way, way beyond the scope of this video, but banks have a tendency to sell off. If anyone has noticed, the bank that is most pertinent is going to be JP Morgan. So JP Morgan is at that supply zone, right? So it's not at the supply zone for the 52-week, but it is at the supply zone for the 5-year chart, which is the weekly chart right here. So last time it was at this level, we were talking about 2001, and we've recovered quite well. And the amount of calls that are in for JP Morgan is pretty abundant. It really, really is pretty abundant. So I'm not shocked if we blow past the $172 level, but I also wouldn't be shocked if we start pulling back to about 157. So all this is a recipe to say that for SPY, if we start pulling up, my target is going to be 480. So that was a lot of preface information, right? I know a lot of you don't follow what I do in the Discord, but all in all, the reason why I have an overall bullish opinion were for the following reasons, right? Positive CPI expectation, a lot of calls coming in on the indexes, and just the run up for what we have here on SPY. It looks like we do start moving past the supply level here. Now, do we have an arbitrary level that we can target? For me, it's 480. And then above that, I'm looking at closer to 482, 485, 487, and then finally 490. That's what I'm looking at. And we will finally get relief on SPY. I just don't know if it's going to be around the corner. I'm most interested in the bond market. I really, really, really am. As we start pulling back from those interest rates, for me, the bond market is where I have the majority, pretty much the majority of my capital. I have a lot of money in this trade. I cannot tell you how much, but it is a lot of freaking money. So for me, we were just talking about risk reward. If anyone is interested, I'm throwing this little curveball here. Right now, if we pull back enough, about the $92 level on TLT, so long as we start seeing something very similar to what we saw here, I'm looking to put on a long position on TLT. For me, it has more room to the upside as opposed to the downside. So the risk reward profile for me for a longer term position on TLT, for me, it's mamma mia. It's, you know, it's saucing on the pie here. So I'm looking for something more along the lines of a long TLT position. Since we have those 3 interest rate cuts, all we're waiting for in the bond market is for that interest rate cut to actually be finalized, because the market for the bonds, they want concrete evidence. They're not like the tech space, right? They're not up there on hot air, right? Like the AI bubble, not bubble, I shouldn't say bubble, that's not the proper word, but the AI speculation or the AI moment that we're in right now, bond market doesn't care about that. The bond market cares about concrete data. So there's that. So SPY, you have my following levels. Levels lower, as low as 465, levels higher, closer to the $480 level. I promise I will not spend that much time on the Qs. I promise. But for the Qs, we have the following numbers. So if we start pulling back on the Qs, if you're a VWAP trader or a moving average trader, the moving averages crossed perfectly, absolutely perfectly with this bullish engulfing candle. Do you guys see that? So that was right at 397. I did not put on any long positions on Qs, and I was a dummy for not doing this. I am long in several tech stocks, but the Qs is just not one of them. So the Qs, in my opinion, you should be targeting. You should be targeting 410 and definitively all the way up to the 412 to 414 area. So if we do get that positive report, it looks like we will be catching up to this supply area here. And for context on the weekly time frame, we're already very comfortably above the supply level that we saw all the way back for December 2021. So you guys see that right here, right? Everyone sees that. Cool. Target areas for me is going to put me right at that 414 level, and I will look to short a position on the Qs, but I don't want to do that. I really don't want to do that until NVIDIA starts cooling off. So NVIDIA, I called this moved out, but like a dummy, I didn't take this trade. So my move that I called out to a T, literally to a T, was if we start breaking above 495, which is right around here. So the 495 area, I said that we were going to reach 510. I was wrong. We were all the way up at 540. I didn't take this trade. The last couple trades that I took on NVIDIA, full transparency, I lost on every single one of them. I thought that we were going to start giving up on some of these levels, but NVIDIA is literally, quite literally, the hottest stock in the world right now. So we want to be careful with putting on any short positions. It is just an absolute torpedo. So this is going to very, very definitively rock the market here, especially for Qs. If NVIDIA is not weak, or if Microsoft, again, Microsoft just hit a 52-week high today. If Microsoft is not weak, then you should not expect any weakness on the Qs. So if we do start to pull back on the Qs, I'm going to give you the following levels. So pullbacks on Qs for me is going to put us right at this $402 level. And then below that, I have $395. And then even lower than that, this is important for the daily. This previous, do you see this? This previous supply level can now act as a support if we start pulling back. I personally like using the moving averages. My moving averages are 9, 13, and 21. So if we get that moving average cross similar to what we saw right here, closer to that $390 level, by all means, I'm looking to take my trade long. So there's that. I promise I'm going to be even shorter here with IWM. I'm already long IWM via something called DPST. So DPST is a 3 times leverage ETF for banks. Actually, for regional banks, I should be clear. So it's a 3 times leverage regional bank ETF. I got my entry. We're 50% up on our shares. Reason why I bring that up is because IWM is going to reflect some of the price action here. IWM still has, in my opinion, a little bit more of a better risk reward for us to break above 195 and start seeing continuation all the way up to 202. So that would be a 7-point move to the upside. Now, if we do start to break lower, in my opinion, 192.50, I actually should be setting this alert. I'll do this a little bit later when I'm not on live. But 192.50, you should be targeting maybe down to about 188. That's what I'm seeing here for IWM. So that would be my target area. And then below that, I have a little bit of a pocket all the way down at 185. All right, guys. So I'm going to do my last ETF here. And then we're going to go over some trade reviews, right? Remember the list that we have here for stuff that, excuse me, the topics that we need to talk about. But let's do DIA. DIA is the one that I'm least interested in. I like healthcare long going into just the beginning of the year. There are a couple healthcare stocks. I really don't want to spend too much time on them, but for DIA, since it is pretty heavy allocated for healthcare, this looks like it will be moving upwards. So if you look at my upward trending corridor, this is following pretty much that trajectory. So we're not really that far out of range, in my opinion. So this is following a pretty comfortable upward trend. Obviously, this is unbelievable momentum. So on the weekly time frame, if we just look at this, this is still following a pretty decent upward trending corridor. And we are past the supply level and the all-time high. I believe we're up all-time high. Let's look at the monthly time frame. All right, so we are at the all-time high levels here on DIA. I'm not rushing or chomping at the bit to short this quite yet. I would like to short this if this does make another leg up. That's going to put me right at around 380, maybe about 382. Now, if we do cut below on DIA, I'm telling you now, I'm looking to take a short position if we cut below about the 372 area. So again, I will be setting that alert. If we cut below here, there's a gap to fill down to about 367. Cutting below that, we have a gap to fill at about 360. I don't necessarily think that this is going to be falling off a cliff anytime soon. All right, so there's that. So those are the indexes. Now we're going to go to the following thing. So the following thing is we're going to talk about CPI and PPI expectations, but we're going to do this a little bit more concisely. So my expectation for CPI and PPI is if we hit the number, if we hit 3.8 to about 4.0, I'm thinking that we have some rally in the market. That is my expectation. If we look at just order flow, just look at it at face value here. The things that are getting the most amount of shorts is BA. Apple is getting a little bit of that too. We'll talk about Apple here in a little bit. Tesla is getting some shorts, but really some of the hard hitters on this in the stock market are your Microsofts, your Meta. We talked a little bit about Netflix, a little bit of Google here as well. Amazon has been doing quite well. I'm looking to see if we can get past that $477 level and seeing if we can finally reach 480. That is my expectation if the report hits a very cool number. If we are hot on the number, so that means that we're above 4.0 for core CPI, and also if PPI comes in fairly hot, then I'm thinking we do finally have that pullback in the market. So that pullback are some of the levels that I mentioned. I'll just do that real quick. That pullback in terms of a scenario that we just talked about when I started my presentation, that scenario is going to put us at some of the lowest point for the short term, about the 465 area. So that's going to be my expectations. I do expect a little bit of a bump tomorrow, but I also expect some knee-jerk reaction and then a final breakout if the number is 3.8, between 3.8 to about 4.0. Not about, but exactly. So if we get those numbers, I'm expecting a little bit of a breakout, but we want to wait for confirmation first. Just because you see 4.0 doesn't mean to buy calls. That doesn't mean that at all. Now, if you see like 3.7, I'm probably going to be pretty aggressive with my calls because I know what that means, that the market is going to love that. Absolutely love that. Now, if I see something like 4.2, then I'm expecting a little bit of a drawdown too. But we want to be careful here, and we want to make sure that we're not trading 0 DTE. Not doing that. Probably going to be doing a 1 to 3 DTE sort of scenario. All right, I'm going to talk about some trade reviews for some of the scalps that I took this morning. I'm going to talk to you guys about the entry, when I cut the trade, and how much money I made on each trade. So this is going to be kind of interesting. First trade that I took was on SPY. So this was exactly this morning. I'm going to show you on the 5-minute time frame. So on 5-minute, we already had a breakout, right? So we were starting to move all the way up to the POC area. This was not the POC this morning, not at all. The POC is only aftermarket, right? We're sort of consolidating here on SPY. I think we're up 0.1% here. First things first, when I saw SPY, when we were looking to move to the upside, I already was on live saying that I did not want to take shorts. The reason why is I had the expectation that we were going to start pulling up in anticipation for CPI. People were going to start getting into their long orders. I was actually correct. So I'm going to show you where it is that I took my long positions. I took my long position on SPY as soon as I started getting right here where we consolidated. This was roughly maybe about 10:10 in the morning. I took my position when we started seeing the moving average crosses. So if you're jumping in on the 1 minute or maybe the 2 minute, or if you trade the 5 minute, I was trading on the 1 minute in particular. So when we pulled back enough, right, I actually took the moving average cross here, and what I did is I just took this long position, and as soon as we started rejecting, I took this position off. I think I took maybe a $10 to $15 gain on this. So this was one trade. So specifically what it is that I was looking at is I was just looking to take the moving average cross. So we're done here. And then I'm going to show you the next 3 positions that I took on Apple. Apple was a little bit annoying today. I did not hold my long position on Apple. I should have. This would have been a relatively good gain. So on Apple for the 1 minute time frame, what I did is I actually took 3 positions on Apple. 2 were very small losses, and then 1 I actually had a recovery for. So the 2 positions that I took, if you just see right here, we consolidated here for a little bit, and we had what I like to call false starts. So all a false start is going to be is when you start to push at a specific direction, but it rejects and then it starts going in the opposite direction. So if you're looking to take puts, that means that you're starting to move in the direction and then all of a sudden you start moving up. So the way that I like to trade is I always like to cut my position fairly quickly, especially if I'm looking to trade shorter DT or just scalps in general. I cut them usually for maybe a $10, $15 loss per contract. So sometimes that's going to be like a 10, maybe 15% loss. I don't like to go over that because then you're starting to accumulate and then you're really starting to get nervous. I don't recommend that. I really, really, really don't recommend you do anything like that. What I do recommend you do is if you do take a trade, you do the false start concept. This is something that I go over quite a bit in the Discord group. So I did a long position right around this area here. Actually, I take that back. I took a long position right around here because I thought that we were going to hit the 184.75 level. I took my 185 call. I believe I paid $1.10 for them, and I was looking for us to break above 184, right? We got that here towards the end of the day. I did not catch this move at all. I didn't catch this. So the first time that I took this trade, I caught my moving average cross, and I was taking this off the 1 minute, but it rejected, and as soon as it hit my stop loss, this was my stop loss right here, cut my trade. And then we started to recover, right? Because I don't want to go through the emotional drawdowns. I don't want to do that. I just want to look to see if we're going to meet entry again. And this is my condition. So we met entry again. I saw the moving average cross. And then by all means, I restarted the position. So then after I lost on the second position, I was down, I think, $16 at this point. Then what I did is I took the trade a third time, and then I made all my money back. I think I was up maybe $2 or $4 on this trade, right? So this is nothing really. This is nothing really to shout home about. But when I started seeing that price action was not moving in my favor, then by all means, I was looking to take off my position. That's exactly what I did. So those are the 3 positions that I took on Apple. And then the last position that I took was on Tesla. So Tesla was eerie. It was quite annoying, actually. So Tesla, I had a level here at 232. And then as soon as I saw the chart, I saw that for me, I thought it was interesting. So on the 1 minute time frame is where I took my entry. That's normally what I'm taking if I'm looking to do a scalp position. And exactly what it is that I did there on Apple, I took my moving average crosses. If you're a VWAP trader, or if you're a moving average trader, or if you're maybe, I wouldn't say RSI because it's a little laggy. But if you're looking to trade moving averages, EMAs, SMAs, I took my entry right here. So I cut this position short. I cut this for a $40 gain. I could have held this position all the way up to my target. My target was 235, 235.30, 235.50. We got very close to that, right? So when I started seeing price action was starting to move against me, I cut my trade for a $40 gain. I could have held this for about $100 gain, but I didn't do that. I prefer actually to cut profit pretty quickly on these scalping positions as opposed to hold on for dear life, because this also could have very quickly reverted against me. So in this scenario, if you are a trailing stop trader, or if you like to move up your stop losses, and we're talking about mechanical stop losses, not mental ones. If you're one of those traders and you're disciplined enough to do that, you could have done that in this scenario. So all in all, I think we went out here for the 4 trades that I took about $40. Not a great day, but I'll take what the market can give me. But all in all, Tesla did hit my levels. This was my first target level right here, which is basically where I cut. And then after that, we started reaching all the way up to 235. I didn't want to swing this position. I'm glad that we didn't, because it basically was range bound today. The trade that would have been quite nice would have been Apple. Apple and Qs would have been a really phenomenal trade for us to hold long. So funny enough with Apple, I had 184 that I took my entry at for the first time. We hit 184 once, twice, 3 times, 4 times, 5 times, and then it finally took off. So if we relate to that false start concept, I would have lost here on maybe 1, 2, 3 trades before I got to my 4th trade, and then all of a sudden started going my way. But you want to set your stop losses fairly tight. So what I mean by that is you set that stop loss, right? You set it there. If you sweep it, right, that's what we do. We sweep the stop loss, you hit your 10% loss, whatever. Then you start to reinitiate the trade, and you also put on that stop loss. If it gets hit, it gets hit. It's part of trading, right? You don't bum yourself out. It's not a slap in the face. You're being mechanical. You're trying to be as disciplined as possible. And then from there, it looked like in this scenario, it would have worked out pretty well. All right, so those are the trade reviews of the trades that I took today. I'm going to go over 5 trading ideas for you guys. This is going into after CPI. There's 5 of them that I wrote down. You guys may agree with me, may not agree with me. That is perfectly fine. These are just for us to share ideas. I'm going to share with you some of the ones that I'm kind of looking towards. So I'll give you an idea of some of the things that I like right now. First and foremost, I kind of like the airlines. Boeing is something that is pulling my attention. So Boeing just had that really, really bad rap, right? And it sold off from one of its peak points. Let's do the 2 hour. Sold off from one of its peak points. And I mean, it's being hammered pretty well, right? So on Boeing, I'm looking to see if we can trade on Boeing, maybe down to about the $215 level, right? So we saw some short positions that were coming in on Boeing. We're seeing quite a bit of them. So it got hit pretty hard here, man. So if we get a little bit lower on Boeing, some of the levels that I'll be watching are the $215 level, and then I would love to see it below $200. I thought it was already too high, and it looks like there are a good amount of short positions that are coming in on this bad boy. So I'm going to be watching Boeing in particular, and some of the airlines. I'm going to mention maybe 2 or 3 of them now. If Boeing can get all the way down to about 190, 195, I would love to see if we can get a long position on this. So on the daily time frame, this is going to put us right around here. So the POC looks like it's most pronounced around the 200 to 205 level, but this is my area right here. I call these pockets. So if we get anywhere close to this pocket, I'm interested in a long. Right now, we have some volume that's come in on this bad boy. And we're very low on the RSI, so I'm not surprised whatsoever if we start bouncing around this $220 level. Maybe a little bit lower than that, but Boeing is definitely a candidate for me. I wouldn't swing calls on this. I really wouldn't, but it is a candidate for a long position going forward. So the sell-off was news-based, right? It wasn't necessarily fundamental-based, but that news base might have been the catalyst for us to see a pullback on this bad boy and finally look to catch our longs. All right, some of the airline stocks, I'm going to talk about AAL and DAL. AAL had a really nice bullish engulfing. We're looking for this to trade above $14.80 and see if we can catch a very slow breakout above $14.80. So that's trade idea number 2. We'll do this as 2.1 because Dell is in the same situation. So I'm just looking for a breakout above this zone right here. So if we can catch a breakout 42.50 and above, I'm seeing if we can see some continuation. Personally, out of the 3 trades that I've discussed so far, I like DAL a little bit better. I am a very big proponent of DAL. I've been a member with their I forget what it's called. Whatever. But I've been a member with DAL forever. It is the airline that I think does the best. I think it's one of the better airlines, and it does have more calls on this than its counterpart position. So that's why I prefer DAL a little bit more than its counterparts. So just to reiterate, a break above about $43, I'm liking this to the upside, so this can start seeing some continuation. Now, if you're looking for targets, my first target would be about $44, $45, and then we have actually 45. We'll leave it at that. So about $45. All right, next. Me likes Apple. full transparency, I'm already in Apple. So I took Apple a little bit lower, closer to 183. My position's already up. So I took a long position, and I've been saying forever, man. I've been saying forever that I want to go long on Microsoft, but I chickened down on my position. So I am long on Apple. I'm thinking continuation on Apple at least to about 189. So that's what it is that I want to see on Apple. Couple reasons as to why. Crap ton of positions long on Apple, crap ton of positions long on Microsoft, crap ton of positions long on Nvidia. And usually with Apple, if you do any sort of studying on Apple, if we pull back like 15 or 20% on Apple, that's usually where the buy the dip mentality starts to come in on pretty much the best stock that has ever existed in the stock market. I really do think that Apple is the number one company that has ever existed, even higher up than Amazon. But Amazon is doing quite well too. So my emotions and my thoughts aside, just looking at Apple, the recovery right here for as low as where we are on some of our indicators, I thought it was pretty indicative that we were looking for a turn signal. We got that on the 2-hour time frame. I took the engulfing. That engulfing candle, as soon as we started pulling back, because we don't engulf and we don't fill the gap all the way up 100%. That doesn't work. What normally happens is we have an influx of volume. That's usually some large orders, and then we have a very slight pullback. And on that pullback, I got in at roughly about 183, and my position is going to expire here for January 19th. So my target area is going to put me here at 188.50, and then above that should be about the 190 area. Aside from that, crap ton of calls. So there's a lot of calls there. That doesn't necessarily always translate to this is going to be turning up. Doesn't necessarily mean that, but in this scenario, it does look pretty good. All right, so that was trade idea number 4. And then trade idea number 5 right now that is PayPal. So PayPal is a stickler. It really is a little bit of a stickler. So I am in a position right now. I thought that the turn here at $58 was relatively significant. We can very easily start turning and start filling gaps down to 58, maybe 59. Some of you might be looking at this and saying, hey, Sage, we just made a lower high on the daily time frame, and you're absolutely right. Now, if I give this a little bit more context on the daily, what it is that I'm looking at is some of the trend that this might have shown right about here. So there is an upward trend, and I'm looking at a little bit of a cup and handle here. So the cup and handle is going to be your cup right here, and then that handle is going to be right off here to the side. So if we start to break above $63, in my personal opinion, we start moving to the upside and incrementally 65, 68, and then about the $72 mark. This trade is going to be very slow. I guarantee it's going to be slow, but it might be a little bit of a pressure cooker and one that I want to be allocated in. So that is going to be my trade idea. That's number 5. Let's look at our agenda board here. So just a couple things that we went over. We did a quick intro of who I am, right? If y'all didn't see that part, you can just watch the video recording of this. We did a quick rundown here on SPY, Qs, IWM, and DIA. I did give you my opinions and expectations for some of the reporting there on CPI and PPI. I did give you a trade review of the 4 scalp positions that I took today. I overall made $40 on one individual contract for all the positions that I took, aside from like 60 other positions that I'm in right now. And then I gave you guys 5 trading ideas, right? So we talked about Boeing, we talked about AAL, we talked about not UAL, DAL. We also talked about PayPal. I gave you a little bit of my, what was the other one? PayPal. I forgot what the other one is. It's going to come to me as soon as I ask you what the questions are. But we went over the 5 trading ideas. And for right now, I don't have any information aside from the stuff that I had planned out, what my agenda was for this presentation. But I want to open up. If you guys have any questions that you'd like to ask me, I'm going to hang out here. But if not, then I'll cut this pretty short. So this was a fairly long meeting. I really appreciate you guys being here. But if anyone has any questions, you can ask them now. I'm going to hang out here for like 30 seconds. If there's no questions, we'll cut this. All right, guys. I really appreciate you guys being part of this presentation. If you're watching a recording of this, If y'all want to add any comments, I'm going to be monitoring the comments pretty consistently here on YouTube. But all in all, I really appreciate you guys. Everyone have a good night, and we'll see what CPI and PPI bring us.